Hi everyone, it's me Maria Starodupa and you're watching a recap of the Asian session. Stock markets extended losses, Japanese shares resumed a downward movement, Australian stock indices retreated to a 4-week low. What triggered such a sharp drop? What trend prevailed on forex in the early morning? Watch our video review and find out. Let's start. Stock indices tumbled due to market fears and uncertainty. This week, several top central banks, the Fed, the Bank of England, the ECB and the Swiss National Bank, have raised their interest rates. Some of them remain strongly committed to monetary tightening in the coming months. For this reason, a soft landing looks unlikely. Inflation in many countries remains stubbornly high and rate hikes are hurting economic expansion. This year, the Fed has raised interest rates at the fastest pace since the 1980s. Other major central banks have followed suit. Next year, Fed officials could raise rates above 5%, a level unseen since 2007 financial crisis. During the press conference, Fed Chairman Jerome Powell hinted that the central bank would not cut rates at least until the start of 2024. Recession fears are mounting because of hawkish stance. The probability of a downturn over the next 12 months stands at 60%, analysts at JPY pointed out. Apparently, the majority of investors are sharing the same point of view. It's extremely difficult to predict what factors could change the market sentiment. As a rule, the US dollar benefits greatly from market turbulence and sell-offs on Wall Street. Yesterday, it rose sharply to 104.9 against the yen, the pound sterling and commodity currencies. However, after the release of fresh macro stats, the greenback lost steam. In the Asian session, it slid into a narrow range of 104.2 to 104.5. Retail sales and industrial production contracted more than anticipated. Some traders believe that these are the signs of a looming recession. At least dollar bulls definitely thought so. For the US currency, the recession scenario is also extremely negative. In the Asian session, the US dollar index fell to 104.4 against the main rivals. The yen did not miss the opportunity to climb amid the greenback's weakness. It managed to recoup some of its losses. The dollar-yen pair approached a 2-week high yesterday, settling above 138. Today, the price recovered, returning to the intraday range of 136.9, 137.9. At the start of the Asian session, the pair was moving in the bearish corridor near the level of 137. The pivot level is located at 137.5. If it climbs above this resistance level, it's highly likely to reach 138.5 and 140. Otherwise, it could drop to the support level of 135.5 and then to a 3-day high of 134.5. The Australian dollar is sensitive to Wall Street's sentiment. If stocks are down, the Aussie also declines. Now it is unable to assert strength versus the US dollar as traders are cautious. In the Asian session, the Australian-American dollar pair fell to 0.6694, even despite a decrease in the US currency and rising oil prices. Apart from that, consumer inflation expectations in Australia sank to 5.2% in December 22 from 6% in November. This is good news for the RBA. It seems that its moderate tightening policy is working, so the regulator will hardly undertake aggressive rate hikes in the future, which is bearish for the Aussie. The Australian dollar, which has been stuck in a bearish channel since early March, keeps dropping. It was moving in the downward corridor of 0.6686, 0.6738 during the Asian session. If the bearish sentiment persists, The pair may test the support level of 0.6728. After that, it could reach 0.6668 and 0.6584. If bulls regain the upper hand, it's likely to climb to the resistance level of 0.7008. That's all for now. Thanks for watching. Subscribe to our channel and keep close tabs on market developments. See you.